Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand what we see out there in the global landscape and how we're currently positioned. We continue to see improving data sets in the U.S. Nothing barn burning as I've talked in previous video updates, but decent. I ultimately believe as we get towards the second half of 2013, we might have just a little bit of a pickup. And I firmly believe GDP in this country will be somewhere around 2% gross domestic product. But unfortunately, 2% isn't all that great a growth when you're looking at a lot of the emerging market economies that are growing at 4, 6, and 8%. We're currently positioned in our relative strength, our global tactical opportunity portfolio across all models, primarily in emerging market equity-based exposure. We do have exposure in the mid-cap 400 in the U.S., which really seems to be the sweet spot and relatively strong, well against the S&P 500. We continue to see the S&P 500, just the broad large cap index in the U.S., kind of now treading water. Ultimately, I've talked months ago, and about 4 months ago actually, our long-term market trend indicators triggered sells on Apple Computer, and Apple's a big driving force with the S&P. I firmly believe Apple's going to be one of those lagging stocks in 2013, and I think the S&P is going to lag other base indexes like the small and mid cap in the U.S. and the emerging market. Currently in our fixed income portfolio, we continue to favor preferreds, emerging market debt or income opportunities, and a few closed-end mutual funds more on the global landscape. And I firmly believe that if you look outside of traditional bonds, whether those are treasuries or munis, I think investors are going to be well rewarded again in 2013. We're going to continue, obviously, running our strategy. We watch our investments every single day. Our business is really about 85% research and money management and about 15% talking to clients, reviews, and potential clients. Most of our day is spent doing exactly what we're supposed to be doing, which is a constant monitoring of the progress of all the investment sectors around the world. One of the things I want to stress to every investor is that at Resney Wealth Management, we don't just look at the stock market or the bond market in the U.S., but you need to look at the global landscape, and you need to encompass every investment asset category imaginable. And you only own those asset categories when they're relatively strong. By running a strict investment strategy, it does two things. It helps prevent major downside in a portfolio, and it also provides upside income and growth in the portfolio, often exceeding what the base index will provide over a rolling 3-year period. I firmly believe we will have a great outperformance this year in our global tactical opportunity portfolios across the board. I firmly believe that there's going to be other noise and news in the landscape, and ultimately, if you follow a strict investment strategy, which includes risk management, which we do every single day at Resney Wealth Management, you're going to be a big winner. Last year was a good year for our clients. I believe 2013 is going to be a substantially better year. And remember, investment markets don't produce returns month in, month out. Sometimes you'll get 3 or 4 months where nothing happens, and sometimes you get 3 or 4 months with great outperformance. But if you look at that rolling calendar year, ultimately I firmly believe it's going to be a great year. We're off to a great start this year, by the way, across the board in all of our models. And again, I continue to favor a lot of the emerging market economies simply because their GDP is growing substantially better than the U.S. Also, and I talked about this on my radio show last week, if you look at the valuations on most asset categories outside the U.S., they're trading at substantial discounts, normally 20 to 40% less than the S&P 500. So what I would say to you is this. On a fundamental basis, if you could buy a dollar for 80 cents or 65 cents, you would do that. Would you buy that same dollar for $1.20 or $1.40? So ultimately, if you look at certain sectors in the U.S., primarily the larger cap stocks, they're really trading at a premium to other much better or quality sectors that have the growth potential in earnings and GDP growth in countries, and that's why we favor those areas. Not to mention our relative strength ranking system currently continues to rank the emerging market equity-based sectors and income sectors amongst the top in the tier level. If you have questions about your portfolio, of course, if you're a client, give our office a call. I know our staff is currently calling and scheduling reviews throughout the month and next month with clients. If you're not a client and want to become a client, please call our office for a consultation. There is a difference. We invite you to experience it. We have a live TV show tonight in Southwest Florida. And of course, we will have our radio show again on Sunday from 10 a.m. to noon Eastern. One of the great things that we are working on right now is for those of you who are not in the viewing district for our TV show, in about a week to 2 weeks, we'll make an announcement on this. We will have our TV show that will be recorded from that night before, and then will be actually embedded into our website. So eventually, in the next couple weeks, you'll be able to go to our website, watch our TV show. Again, if you're not a client, call us for a consultation. We'd love to talk to you. And of course, if you are a client, call us if you have any questions. Have a great and profitable week.